Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on today's show?
Well, today we're going to go back to lithium mania in the James Bay region.
What do you think of the short attack launched against Patriot Battery Metals?
On July 6th, an outfit called Night Market Research, which specializes in identifying short-selling opportunities, published a pretty lengthy report titled Patriot Battery Metals, Aggressive Vancouver Promotion with Multiple Maiden Resource Estimate Delays and Fake Buyout Rumors Running Headfirst into a Wall of Risk and Warrants. And last week, that started to take the stock down. There was a big fuss over the weekend. There was the Australian Stock Exchange. Whenever there's a short attack like that, requires a response from the company. The company did put out a response. There was some question as to whether Patriot Battery Metals would be halted until Wednesday. It turned out that wasn't really necessary. It was allowed to resume trading on Vancouver or on the Venture Exchange on Monday, and then it resumed later that afternoon in Australia's Tuesday, and it had recovered back into the $15 to $16 range. Now, how serious is this short attack by this group that I never really heard of? What it really appears to be is an effort to talk down the stock as if this entity is working on behalf of potential buyers such as Rio Tinto or Pilbara Minerals, or perhaps even Goldman Sachs, which has been working very hard to talk down the price of these lithium companies, because I suspect that Goldman Sachs is working on the buyout side for the various automakers, battery makers, and even other producers who want to own what will ultimately be a $100 to $200 billion market by 2030, higher if what Rio Tinto projects becomes reality, and even higher if what Toyota just declared, that by 2027 it will have a car with a 1,200 kilometer range that charges in 10 minutes, because it claims to have achieved the holy grail of the lithium-ion battery market, namely a solid-state electrolyte that allows lithium metal to substitute for graphite in the anode. And if I could buy a car like that, well, I'm totally all in. A car like that solves all the hang-ups everybody has about owning an electric vehicle, range anxiety, having to waste a lot of time waiting for it to recharge. So everything's really pointing to a very, very strong lithium future. So what is this report actually saying? The timing is maybe a few weeks ahead of the maiden resource estimate that Patriot Battery Metals is predicting will come out sometime this month. And what's interesting is that the company has assembled a range of resource estimates that various Australian and Canadian brokerage analysts have put together. And I was surprised by this. It ranges from 90 million tons by National Bank at 1.35% lithium oxide to 160 million tons of 1.12%. There's about 8 of them in there, and the average is 125 million tons of 1.19% lithium oxide. And that's higher than the range I've been guesstimating, which is in the 50 to 100 million ton range for the CV5 pegmatite, with a grade somewhere between 1 and 2%. I don't have a leapfrog model, and I don't have the time to manually put this all together, but the company does publish a spreadsheet with all the holes, all the azimuth, which is the angle of the hole, the dip of the hole, a drill plan with the location. It publishes all mineralized intervals of 2 meters or more. And this is available as a spreadsheet you can download from the website. And analysts have been doing this and using whatever methods, such as a leapfrog modeling, doing a crude conceptual model of what the resource is going to look like. Now, ideally, they would provide a data set that has all the 2 meter assay intervals so that you have the granularity and you can pick out your own your own cutoff grades and come up with a geometry that makes sense. And this is why you can get a very wide range. You get a lower tonnage with a higher grade, such as suppose you just focused on the Nova Zone within the CV5 pegmatite, or you can get a lower grade but a much larger tonnage. And the real value, of course, is what this thing would be worth if it were mined. Now, Night Market Research came up with its own number, 73 million tons of 1.28%. And I'm thinking, wow, this is like the first pegmatite within a 45, 50 kilometer trend, where we know there are going to be perhaps 2 or 3, maybe 4 similar CV5 deposits. If it delivers this for CV5, that is a huge success. Now, what they have kind of done is, because the analysts, and they claim that the CEO Blair Way has encouraged the market to anticipate a resource of at least 100 million tons, because of course they want to make the comparison to the Kathleen Valley project of Liontown, for which Albemarle made a conditional bid of about 5 billion Australian that was rebuffed. Now, this project has actually had feasibility studies done. It spent 5 years grinding through the whole feasibility demonstration cycles and permitting cycles. And this is really the point that Night Market Research is making. It's saying Patriot Battery is priced at the peak of what I call the S-curve, what others call the Lassonde curve. And once the resource estimate is out, it's going to go down in value as we wait for all the tedious metallurgy and the engineering and permitting, environmental studies. They bring up the lake sturgeon that supposedly lives in this lake, that the whole world will be aghast if they have to move to another lake. They complain about the Quebec being actually a horrid permitting regime, taking forever to get anything done. And I think that is something where the Quebec government is going to have to improve things. But what they are basically saying is that the stock will decline after the resource estimate is out to a lower level. Now, what would that lower level be? Well, suppose if we got the number and we came up with reasonable CapEx and OpEx and we ran it for 15 years, and came up with, say, a Canadian value for this. That should be about 5 to 10% of the total value. So it would be like a $2.50 to $5 stock compared to $15 or so. But if you were to leapfrog and say, okay, we're at pre-feasibility stage already. We have done the PEA. We were now doing the more detailed engineering. Then the fair value under my rational speculation model climbs to 50 to 75 cents. So all of a sudden, we're talking about a $25 to $38 per share company, which might be reasonable for a Rio Tinto to pay if we had confidence about these economic numbers. Well, we won't have these economic numbers for at least a couple years. However, with all these competitors realizing that the James Bay region is turning into a monster lithium district, only recognized as such in the past couple years, and recognizing that this trend has 50 kilometers of strike where there's evidence for multiple additional pegmatite bodies similar to CV5, this is something equivalent to like owning a major chunk of the Abitibi Greenstone Belt, the Cadillac Larder Break, or even better example, owning the entire Carlin Trend. And all you've got showing right now is Gold Strike, but you suddenly understand John Munteen's theory about what's going on here, and it doesn't take a rocket scientist to realize that with additional detailed exploration, you're going to find a lot more Gold Strikes or CV5s within this 40 to 50 kilometer trend. So the potential is there for a buyer who sees the big picture to pay a strategic premium, to ignore the fact that we're at the S-curve peak and pay $2 to $3 billion to take out this company. And I suspect that this will happen. I don't think it can go to the sort of $3 to $5 billion valuation, because we are still missing those couple years of feasibility demonstration, permitting type work. But it is possible that somewhere between $15 and $25, we could see Patriot Battery Metals disappear, and that of course would be huge for the James Bay, great Canadian area play that's unfolding in James Bay, because this money would probably be recycled. It's got a big Australian shareholder base. It has a fair number of Canadian shareholders, and we know that this is not like some rare earth deposit where you only need one of them, a huge one, to take care of the world's needs. We need a couple dozen CV5 equivalent deposits, all being pushed into production by 2030 in order to meet those 600% demand expansion requirements that the International Energy Agency comes up with, and which will be even larger if Toyota is correct about its breakthrough in terms of a 1,200 kilometer, 10-minute charge electric vehicle. Now, the night market research has, of course, turned this into kind of like they're even though their basic argument is that we're going to go into the value trough that follows resource estimate in the Lassonde curve. What they're also trying to do to help the stock down by coming up with a lower resource, a tonnage estimate than the analysts are predicting, and they're trying to say this will be a failure if it's actually less than what the analysts come up. But to make people believe this, they are also talking about the sordid history that Patriot Battery Metals has in its early days, where it paid $500,000 for some 6-month digital marketing contract with somebody who lives in a house near Kingsway in Vancouver, near Central Park. You can't tell. You Google this, you have no idea who this is. There's a whole bunch of other marketing deals that has been done. But one of the things I've argued is that even the most, with something like this Lithium Mania 2.0, even the most awful company could end up becoming a giant success if it puts proper exploration to work and comes up with something like the CV5. Another technique they use is they trash can Brinsden, because even though he was part of the Pilbara success, prior to that he was involved with something called Atlas Iron, which turned into a failure. And they're saying, well, that you can't trust this person. He's the chairman now. Be careful. Well, this is like after Robert Friedland has delivered the Diamond Fields Voisey's Bay success, everybody says, don't trust this guy with this Ivanhoe Mines that he's got going here. He had Galactic and its Summitville disaster before that. Never mind that Turquoise Hill emerged out of Ivanhoe, and never mind that even in the more recent incarnation of Ivanhoe, Kamoa-Kakula emerged. So they're using the fact that entrepreneurs have failures in their wake as a reason to thumbs down that person. Now, one thing they bring up, which I have brought up myself, that is a concern, which is the substantial overhang of warrants in the money. There's about 27 million of them, maybe 24 million now, that are between 35 and 75 cents way in the money that haven't been exercised as of March 31st. And I've been wondering, what are these people waiting for? Why don't they cash this in? It's not like exercising warrants. It's like exercising options where you instantly have a tax hit. What are they waiting for? So the night market research, I think, correctly points out that this is a bit of a time bomb, because if there is a scare in the market and these people start exercising, they're going to be selling stock. And then, of course, when they see a downtrend, everybody likes to sell in a downtrend. So they are really trying to set up Patriot Battery Metals to generate a cascade of selling. And they've created this false expectation that, the analysts predict 100 million tons of generally below closer to 1%, whereas we predict 73 million tons of 1.28%, which is close to the high grade range that the analysts come up with. They're trying to set up a fall. And they even invoke Goldman Sachs and say, well, Goldman Sachs says the projections of supply, China and Latin America, they are going to be flooding the market. And we've heard this China story for some time now, and it doesn't have a lot of credibility. China's brine and pegmatite resources, it's not like their molybdenum, rare earth, or zinc resources. China is not going to be able to do this. And then they sort of talk about the price that Goldman Sachs is predicting for next year. And they do it, of course, in the sort of $4,000 per ton lithium carbonate manner. And I'm thinking, okay, let's convert this to the per pound number that I'm familiar with. And lo and behold, they're predicting $15 a pound for next year. Well, if lithium carbonate is $15 a pound this time next year, wow. I mean, I'm expecting it to eventually grind down to $10 a pound and that to become the long-term average. But even though what Goldman Sachs is saying is very bullish for developing these lithium pegmatite deposits, they're spinning it in a way to make everybody have this negative funk. So I think the company put out a response to some degree. It can't, of course, say much about the past marketing deals other than, well, say that this 18-month term, we canceled it after 6 months, gave $500,000 US to this joker for doing nothing. They did rub it in, saying the company only had a market cap of $20 million at the time they pulled the plug on this ridiculous marketing deal. But when you look at what they've accomplished, CV5 is a huge fundamental exploration success, and it doesn't matter what the history of the company was. And in a few weeks, we will see a resource estimate, and if it comes up in at what the night market research predicts, I say hallelujah, because that's just the beginning of a lot more to come for Patriot Battery Metals.
What do you think of the farmout deal Azimut did with Rio Tinto?
This was funny. Here we get this short attack saying that it's going to take forever to get a lithium deposit in the James Bay region into production because the Quebec permitting regime is so difficult, and this resource estimate is going to be much lower than people expect, and people will be angry and sell the stock, and there'll be all these warrants that will be exercised, and the stock dumped into the market. And then all of a sudden we get a deal by Rio Tinto to option up to 70% of two of Azimut's projects, the Corvette and the Kanaya property. Both of them are fairly large properties, not adjacent to the Corvette, to PMET's Corvette property, but a bit to the south and potentially within a parallel trend. And in mid-June, Rio Tinto did a deal with Midland exploration for 10 of its James Bay lithium potential properties. And that one was for $64.5 million over 10 years. This one is similar. It's 9 years, and it's actually more, and it's split between the two properties. So Rio Tinto, to earn 70% in both these properties, would have to spend $114 million total. Now, because it's split between them, they only have to do, say, half of that if one of them turns out to be a dud, and then they focus on the other. But the deal is strong. It requires $1.5 million of exploration on each property. That's firm. They can't back out of that. They get a $250,000 cash for each property, so that's $500,000 up front. And as far as I can tell, these properties don't look particularly interesting. Yes, there's some lake bottom sediment anomalies over them, but those may have been glacially transported. So who knows whether they're from local or they've been transported down from the CV5 trend. And but what's really interesting about this deal is that Azimut CEO Jean-Marc Louin must have looked at the Midland deal that Gino Roger did and sort of said, okay, everybody's saying this is a bad deal because within 18 months, Rio Tinto can have killed those properties and walked away, and whatever upside there was in finding low-hanging fruit sticking out of the ground, that will not have been available for Midland to harvest. Azimut said, well, we'll take that risk too, because frankly, Jean-Marc Louin don't really believe in this lithium mania stuff, but if people want it, sell them what they want. I believe in the nickel potential of the James Bay region. So I've done this deal, but I don't want to be on the hook like Midland if suddenly Rio Tinto finds something fantastic and blows through $57 million very quickly and is now in the expensive feasibility demonstration stage. I don't want to be stuck paying 30% of that and being cash called to death with very lousy information data flow. So I want to have the right to make you take an extra 5% to carry me through production in the form of a loan for my share of the 25% cost, which will be repayable from 50% of my share of the cash flow. And that's a really strong provision, and Rio Tinto went for it. Why? Well, I think you would think it's because they really love this property and they want to have as much of it. No, they wanted to get it done. Rio Tinto's Jacob Stahlsom has been sort of giving thumbs down on the valuation of Patriot Battery Metals, saying, we're not interested in these super expensive things. And the night market research seems to have some sort of alliance with these big guys to kind of talk these things down so that a buyout can happen at a decent price. And of course, the night market research has gone short the stock so that it can benefit from the stock going down. But really, what Rio Tinto is doing is it's tying up the peripheral land because if there's something there, it wants to make sure it has it and doesn't have to pay more later for it. And if they do make a bid for the Patriot Battery Metals, well, they will at least know what everything else is around it and won't have to pay up afterwards. But there's also the scenario here, and the deal is not actually that good for Azimut, because I look back at Great Bear and its Dixie project, and all of a sudden Barrick Gold does deals with a bunch of couple of Ryan Colt companies that own the pasture surrounding the LP trend, where all this gold mineralization is being delineated, and we figure, this is a precursor to Barrick making a bid for Great Bear. But what happened instead, Kinross made a bid and paid more than Barrick was willing to pay. And of course, the resource did come in less than everybody thought it would. And then Barrick promptly dropped those properties surrounding it. So this is the risk for Azimut and Midland, that these deals could be dropped. Now, on the surface, it looks like Azimut has the stronger deal than Midland. But Azimut still has its 50-50 JVs with Soquem on the Piqua property, which is another 10, 15 kilometers of the actual trend that Corvette covers. And it also has the 50-50 JV with the Galinee, which is next door to Winsome's Adina project, farther to the east. So it could still do extremely well through the JV with Soquem. But in the case of Midland, the only property that's near this area is East Mithril. The best one, which is the Mithril property that sits right adjacent to the north of the CD5 area. Brunswick managed to secure 85% last November of the critical minerals, which includes lithium rights, to this project on relatively easy terms. So Brunswick will harvest any upside that could be found in this parallel area. In terms of Midland's other properties, some of them, like Como, look really interesting. And even if Rio Tinto loses interest in the Corvette trend area because, say, Albemarle or Pilbara or somebody comes in there and takes out Patriot Battery Metals, it will it's already committed to the lithium sector, so it might put a lot more effort into something like the Como project. And if it pours all of that $64 million into one, well, Midland will end up with 30% of something substantial that has been largely de-risked, and we'll get value out of that. So it's not really that horrible a deal. And frankly, I think the Midland deal is better for Midland than the Azimut deal is for Azimut. And the reason is that if something big happens to Patriot Battery Metals, such as it gets taken out, nobody's going to buy Azimut or Midland for the peripheral play. They're going to buy the other ones. They're going to look at companies that are a long trend, like Winsome with its CanSet project, farther to the west where it bends northwest, Brunswick with its Plex 90% option, and they're going to look at the parallel trend to the north that Champion Electric has. And I suspect that the CEO, John Buick, has received overtures from Rio Tinto, but he's smart enough to know that we know nothing about this trend. We've got this huge 50-kilometer plus trend that's been hardly explored for pegmatites. Let's do this ourselves. Let's not have Rio Tinto spend its $2 million and have basically 70% tied up, and this thing possibly second fiddle in terms of what it wants to advance if it does end up being the party that ends up buying out Patriot Battery Metals.
What did the market like about Brunswick's latest news?
Brunswick exploration has been ailing in the market for the past 3-4 weeks for two reasons. One of them was that on June 6th, the Quebec government imposed a big, widespread forest access ban, which forced all the boots on the ground that Brunswick and other juniors had in the James Bay region to get back out. And the reason were the forest fires in southern Quebec, which were threatening infrastructure and communities, and Canada lacked the firefighting capacity to deal with something like that, and helicopters were requisitioned from everywhere to provide support to protect these communities from fires. And Brunswick had only managed to get onto two properties. One of them, they spent 4 or 5 days on the Anatacau main property, where they were doing follow-up on very sort of vague satellite imagery that suggested the outcropping pegmatite. And the other one that they sent their boots to was the Mirage property, because this is what they had optioned and staked on the basis of reports from 20, 30 years ago from a prospector who had found spodumene-bearing boulder on that property. And they did report this several weeks ago. The Mirage boulder train, 1,700-meter band, 200-meter wide band, 1,700 meters long. They didn't initially say that it was perpendicular to the ice direction, but it subsequently came out in conversations that it was perpendicular. That's really important because if it's perpendicular and it's a narrow band, that means the source is probably quite local and hasn't been dragged for tens of kilometers in the ice direction, in which case it would have more of a fan type of a look, and if it were a linear body, it would have a very linear train in the same direction as the ice direction. But they did not have time. Within 1 day, they were forced to bug out, to get the hell out of there. There's a ban in the way. They were not able to figure out where exactly the bedrock source for this is. So the market's sitting there thinking, okay, they have all these properties, James Bay region, Plex, Mithril, and many other smaller ones, and they can't get in there to put those boots on the ground. And so we're going to be sitting there in September, and they won't have had a chance to generate any drill targets. So the stock has been sagging. So that's one reason. The other reason has been Red Cloud did a big $7 million plus financing in March. Some of it was initially free trading under the life exemption, but most of it was subject to a 4-month hold. And that ended early this week. So all of that financing, an 85-cent unit, is now free trading, and you can imagine the Canadian type of investors, clip and flip, risk averse. They want to dump the stock, clip the warrant, get the free lunch for a couple of years. So the market has been hanging back, waiting for this clip and flip paper to come into the market once it was free trading, while wondering if and when Quebec will lift the forest fire ban. Well, on Wednesday, the stock traded as low as 68 cents, but Thursday, on July 13th, they put out a press release saying that on the Anatacau main project, which is about 15-20 kilometers east of the Anatacau West property, it's a fairly large property, optioned 90% from the Osisko group, that they had identified a cluster of spodumene-bearing dikes, including one that was 100 meters long, outcropping, and 50 meters wide. Now, the stock reacted. It was traded as high as 82 cents on Thursday, traded over 1 million shares, and I'm like scratching my head saying, what's the big deal here? So your question is right. And I called up Killian to ask it, this looks like your Hearst target, the decoy, where you had 65 meters of outcrop. You started a 1,000-meter drill program on April 24th. We've heard nothing about it since. We assumed that as soon as you step beyond the outcrop, you got nothing, and that Hearst project is pretty much a dud. And so why is this market reacting so strongly to this news, which doesn't look that different from the initial Hearst target? And the explanation he gave was quite interesting. So there's this deformation corridor that runs east-west. It's a structural zone, sort of a big sheared zone. It continues all the way into Allchem's Galaxy Sear project, where there is the resource that Allchem is putting into production, continuing to extend to the west, and which also we now know extends onto the Anatacau West property, which Brunswick drilled earlier this year, at least 300 meters. And what that is all about, it's an on-echelon series of dikes that are sort of northeast oriented within an east-west shear structure. And these dikes are doing this because these are dilation zones that have emerged within this structure, and the pegmatites which wander through rock have exploited these and nestled in there. Now, the problem with this type of dike setting is that if you're going to bulk mine it, you're going to have to get the average grade of the dead stuff between the mineralized dikes. And if the dikes aren't rich enough or too narrow, or the space too big between them, and you have like a short distance of only, like, say, 300 meters, you're probably not going to have a mine. You'll have something like what the Pontax system that Cygnus and Stria are trying to show is actually better than what drilling has so far indicated. But on the Anatacau main property, where this shear structure deformation corridor continues, these pegmatite outcrops and dikes are actually aligned with the direction of the shear structure, which means there is potential running room along strike, because if the pegmatite is exploiting the linear weakness of the structural zone, it has the potential to become fairly substantial. They call it the anase showing, and they took samples. They have gray spodumene crystals up to 20 centimeters. They waited for the assays because they knew the market would kind of be negative about some short 100-meter outcrop. And they got the results and published them on Thursday, and they ranged from 1.2% to 3.8%, 19 samples. Most of them were over 2%. These are not representative, because what they've done is they've picked the best parts, and they just wanted to know, okay, what sort of a lithium grade does this system have? And the numbers are good. The next step will be to go in there and do some channel sampling across these dikes to see what the continuous variation of grade is. But the most important thing will be to step out long strike. And of course, they published a picture. You can see it all disappears under trees, bush, and dirt in both directions. And it could be that there is just this 100-meter system. They think it's steeply dipping, which means that the 15-meter width at surface is probably close to true width. That's not a huge dike, but the fact that it's oriented in parallel with the deformation corridor, that to them is significant, because this area to the east, the pegmatite outcrops are very sparse. You can barely see them through the satellite imagery that they are using. This is sort of second-order exploration where you have to look at the right geological context, put the boots on the ground, and see if something is barely sticking out. So they have achieved this at Anatacau. They spent 4 or 5 days doing it. They're already initiating permitting. The permitting cycle in Quebec is now about 45 days. It's not affected by the fire ban, because they know that, they'll go back in there as soon as they're allowed to go back in and see if they can see repetitions of this pegmatite outcropping along strike in both directions. But ultimately, they know they need to get a drill on there, step out and drill blind in the projected direction of this dike. In terms of the forest fire ban, there's a lot of rain now moving into Quebec. Montreal was pounded with severe thunderstorms. I've seen some clips of geysers of water shooting 20 feet into the air out of manholes. There's even been tornado warnings. Southern Quebec, there's no fire danger anymore. The James Bay area is still restricted, but we're hopeful that sometime next week this will be opened up. The helicopters are being available, and we're hoping that next week we get a green light for James Bay, boots on the ground. Obviously, Brunswick Exploration wants to go back to the Mirage property because the market wants to know, where is this coming from? Do you have at least a 1,700-meter long pegmatite in the ground that's maybe like a half kilometer, 1 kilometer to the northeast of this boulder field that you have? And then, of course, immediately start initiating the drill permitting for that. And the boulders, of course, they took samples. We should be close to getting assays to get some sense of the range for that. So there's another potential news bounce from that. And they never made it to the Mithril nor the Plex properties. Both of those are important, especially if the resource estimate makes PMET go up rather than go down as the Lassonde curve goes into its value trough. And exploring the Plex trend, which is another 40 kilometers of this particular deformation corridor that's got gold potential but seems to have better lithium potential, putting the boots on the ground there and finding out what's there, and also going to the north onto the Mithril and seeing if there are parallel pegmatite occurrences there, basically the equivalent of what the Rio Tinto will be doing on the Azimut ground to the south, and we'll see what comes out. And they do plan to have a drill, which they will take from one project to the next, starting in September. So we're heading into a summer that's normally supposed to be the doldrums. But this year, lithiumania may come to life. Canadian investors, they have no fear of missing out anything. But if the Patriot Battery Metals becomes the focus of a buying auction rather than a sell-off, because the short seller is correct that it was way overestimated and no big company is interested in this potential. If we have the positive scenario, that may be the trigger that finally gets Canadians to accept this lithiumania 2.0 is real, and there's all these companies such as Brunswick, which are Me Too candidates who need to, in the case of Brunswick, go up tenfold to end up having a similar S-curve peak valuation as Patriot Battery Metals has right now.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.